Morning, Tim. Thanks, mate. We'll kick off if you can go to the first slide, please, mate. Next. Thanks. So, corporate overview of the company. Basically, market capitalisation is about 69 million, mate. Shares on issue, as you can see, 754. Options and warrants on issue, 41 million. Share register really hasn't changed from our last presentation when we talked to you a couple of months ago. Our diversification program hasn't changed between countries, South Africa, Australia, and Guinea, and our organic growth also again is focusing on delivering more coal out of South Africa and our bauxite out of Guinea-Conakry. So next, please, mate. So as you know, we've got through COVID and we're pretty much coming out the other side. We've got a significant growth platform and a diversification, as I said, multi-jurisdictional operations, Australia, South Africa, and Africa, and the African continent in general, I suppose you'd say. And because of what we're doing in South Africa, we've got a natural hedge to seaborne commodity prices. So we basically have finished. Danny's finished what he's doing in Australia with Blair Athol, and now he's focused on South Africa. He's been in South Africa for a couple of months and looking to be there for another 2 to 3 months, and basically right-sizing the business. We took South Africa over, I suppose, in the middle of COVID. We had no opportunity to be in the country to do what we would normally do. So I'll hand it over to Danny to talk to everybody on what is probably what everybody's looking forward to hearing about is what we're doing on our universal operations in South Africa. Go for it, mate.
Thanks, Craig. Might go to the next slide, Tim. Thanks, mate. Just laying there. Good day, everyone. Coming live, as Tim said, from South Africa. Just a bit of an overview for everyone to orientate on our operations here in South Africa. All of our current operating thermal coal projects are within a comfortable 200-kilometre radius of Pretoria, where our head office is. Some are a lot closer, but if you cast a net, that's where you'll find them. We have a number of developing projects in the Witbank coalfield area and a coking coal project up in the north, which we continue to evaluate and progress as we exploit the current thermal operations. So if we can go to the next slide. As you can see here, we've got a good stock of resources, which really underpin the current operations for up to 10 years at the current run rate for South Africa on our operating thermal coal mines, with our imminent development at the Eloff project, which is essentially contiguous to Kangala and will use the Kangala infrastructure. So will be a low-cost operation for us to get up and running. We're awaiting the finalisation of a coal sales agreement with Eskom, and we are ready to break ground at Eloff imminently, and hope to be doing that in the next 4 to 6 weeks, which will be exciting development for the company to progress the Kangala operation, which has been very successful over the past many years. Next slide. As Craig alluded to, I've been on the ground in South Africa for a couple of months with an advisory team from Australia, and we advised the market on the 12th of April that we had re-established management control of the business. In parallel to that, we'd been undertaking a critical analysis of information both before we got into the country and as well as due diligence on the ground, solely to immediately deliver operational improvements and underpin our financials. And as Craig said, we took over Universal in the middle of COVID and haven't been able to get here until now. And quite pleased with the response and energy that we're seeing from the South African management team on the ground. So there's a number of challenges for us to overcome, and we've been through this in Australia at BA, and BA has been quite transformational in its own right in 2020, and now is consistently delivering. So BA will be about building resilience this year, and we have a fair amount of work to do here in South Africa, but we're well advanced. We've initiated a number of things on the ground which we're seeing dividends for. That will give us a strong platform to grow, and importantly deliver the financial performance that Universal has been historically known to do prior to us taking over in the midst of COVID and other global related issues. So as Craig said, I'll remain here until the job's done. We'll get the management team embedded, the changes that we need, and everyone will see within the next couple of months significant changes and improvements with sustained profitability being delivered this quarter. Next slide. A couple of key changes that we announced on 20th of April. There's key one being the CEO, Shami. Shami's a partner in a number of our South African operations, and he'll remain involved as a director of Endalamo, and he will leave the operating part of the business at the end of this month. And I've been working closely with Shami, who's been a tremendous assistance to me, and has been guiding me and showing me the lay of the land in South Africa. So that's been a very good process. And also Tony Webber. So Tony was engaged on a fixed term contract with the organisation as we took over, and Tony's been a committed also founder of the organisation, and he remains in a consulting role working directly with me, and will ensure an orderly handover to our new COO, Zirk, who we announced last week. Zirk commences in a couple of weeks' time, and has a proven track record in multiple mining operations and a significant CV. So Zirk's a good addition to the team, and looking forward to getting him on board and getting him focused on the good work that we've already started to implement. We're not waiting around. We're getting on with the job at hand. So some key changes there at corporate, as well as some other operational changes with management that we've successfully implemented to date. Just a quick snapshot for everyone. When you look at the combined operations across, particularly in the coal, we've got 16 million tonne of ROM. So, last year for us was significant. We took BA, we restructured BA, we purchased Universal, and now we have 16 million tonne of ROM under management, with longevity in all of those operations, most of them up to 10 or in excess of 10 years, which gives the business a very good platform to stabilise operations, maximise profitability, and be a real springboard for us here as we search for further coal opportunities and to bolster our export capability out of South Africa. So we've got a good fundamental business, both in Australia and here in South Africa, that gives us longevity. And, with our cost base, particularly BA and our resultant cost base here in South Africa after we've completed what we need to do, the coal price can do what it inevitably does over long-term cycle, and we will remain very resilient through there and profitable through all aspects of the coal cycle. Thank you. Just to touch on some key metrics. When we took over BA as owner-operator, we had very aggressive aspirations to get BA to under $60 a tonne, and I'm pleased to say that 9 months in to this financial year. We remain at that with forecast to be slightly under $60 a tonne, and that allows us to achieve strong margins for the rest of the financial year, with some sales locked in to be $25 to $30 per tonne profit for the June quarter. South Africa has got some very good high-grade energy coal from our MBC and NCC mines, so very strong focus, and going forward you'll see an upkick, couple of slides that show that, and we've got a forecast sales of 9.4 million tonnes, which despite all of the challenges of this year is in line with the previous financial year. Thank you. Next. Probably can skip this one, other than to mention that BA has got a very strong contracted sales for the coming quarter of 675,000 tonnes, which gives us a 2.7 million tonne run rate. Quite a good achievement for BA. Apologies if people can't see these slides that well on the screen, but I guess the key thing here is on the left, we've got the Eskom coal sales. You'll see by quarter, the challenges, the red line representing compliance to budget and the blue line representing our actual coal sales. So you can see the impacts of COVID and the industries resulting from Eskom, and particularly quarter four, as you can see, a recovery through Q3, and we're forecasting to be above budget on all of our operations, notwithstanding Kangala or Elof is yet to strike a blow. So very pleasing recovery. And the key one here is our export strategy that the commercial team have been focusing on since taking over Universal. You can see a major increase in export sales in quarter four from a 50% Q1, Q2, slight uptick in Q3, but a significant overall outcome in Q4, which will continue to ramp up and capitalise on the path to market that we've established. Thank you. Couple of key points here. Eskom levels have stabilised, and as I said, all operations are forecast to deliver contracted quantities, and in fact we've achieved that throughout March, and that'll be subject to our quarterlies. And you know, we are seeing Eskom making huge progress in their maintenance program, which will increase their capacity and their full demand. Next slide. I guess the key point here is, you know, South Africa relies on coal for its power, and at least 69% of the country is powered by coal. So, you know, for us, it makes sense for us to have a footprint here and to grow our coal business in South Africa, as well as our export. Next. Milestone here for the company in the last quarter, where the path to market was established, and we were able to take our first shipment of coal. You can see some happy snaps there at the bottom of the page, which shows the stacking of the coal, the actual loading of the coal into the vessel, and then the vessel sailing, which has been a great achievement. And we have another vessel ready to go imminently from South Africa, which will be the second in its own complete right since the inception of the company, and on the back of the company's commercial and marketing team since we acquired Universal in June of last year. Thank you. Pass over to Craig.
Thanks, mate. So very quickly, Jim, we've announced to the market, mate, the refinance program and kept the market pretty well up to date. Obviously, the key benefits are improving our balance sheet, real cost savings for the shareholders, and we've tried to create a more flexible and efficient platform. The use of funds, obviously, refinance existing bonds, development of the bauxite in Guinea Conakry, and expansion capital. Next. So we've at this stage we are finalising the negotiations with only two parties. We've narrowed that down over the last 3 to 4 months over the US election and COVID. And you know, the facility will be between 5 to 7 years. One facility of approximately 100 million for 5, another 120 million for 7 years, interest rates less than 10%. And then we'll have a further working capital facility for any acquisitions that we may come across of approximately 100 million. So, we are well advanced in those things, and we look forward to completing them pre the 30 June deadline. Thank you, mate.
Thanks, Craig and Danny. We've got a couple of questions. And Danny, you obviously did a fantastic job in extending the life of Blair Athol and making some major changes there. What sort of changes do you make when you come to South Africa?
Yeah, thanks, Tim. It's interesting how similar things are, even though I'm on the other side of the globe, mate. So, it's the basic discipline around operational management, some governance, some key changes and focus, getting people energised on different metrics that we see as being successful to reducing our cost base and giving us longevity at long run coal prices. So, could almost pick up the template that we had at Blair Athol and apply it over here. Of course, some changes around corporate, as Craig alluded to, with the changes required there for us to reassert management control, and I guess a renewed focus and energy on key deliverables that we will aggressively measure and manage every day, Tim.
And a question, I'm not sure who it's for, but Eskom is obviously a vital client of Terracom. What progress, this is a direct question, what progress are you seeing in its improving of performance and its coal purchasing power? What is the outlook for kind of moving forward for Terracom and Eskom?
Yeah, I'll take that one. Eskom, I met with some representatives and have had conversations, and we are seeing a renewed focus or some good output from their aggressive maintenance recovery program. That is returning the power stations back to capacity, which in turn requires a further demand. So we are recovering and improving our operations at exactly the right time as some other contracts come off, and we capitalise on our good quality. So, Eskom are, a challenged organisation, that's publicly known, but they're working hard to get their own maintenance programs back in check, which, obviously is important for us, and we're capitalising on that. And you can see in our Eskom coal sales being at contract or above for the coming quarter, and particularly as we progress through this calendar year, we see that stabilising and improving.